Restructuring provision. Restructuring provision simply talks about when the company wants to restructure its entire business or part of its business. What happens? And so because a company at a point can decide to reorganize. You see, and so restructuring, it can be what restructuring, or you can say reorganize. So if you want to restructure maybe the entirety of the business, or you want to restructure a section of the business, it comes with cost. A cost that will affect maybe part of the building, a cost that will affect workers that are working in the organization, and so on and so forth. So when that happens and you are expected to embark on this restructure, there are certain things you need to do before you can create a provision for that, because businesses will not just wake up one day and do restructuring. No, it goes through process before they implement it, right? It goes through process before what they implement it. So whilst it is going through this very process, they will create what? A fund with the expectation that they are going to what? They are is going to cost them this amount to do the restructure. So if so, then they need to create a provision against what? Such period to come. So if so, provision for restructuring may only be recognized when one, the entity had a detailed plan, detailed formal plan. They should have a detailed formal plan of the business, because the management or the board should meet and deliberate about it. That makes it formal. Then they plan the areas that are going to be affected by the restructure. So this process should satisfy the process before you can say you are going to recognize the provision. So one, or A, it's the business concern. So they should have a detailed plan of the business. Yes, because it can be that the restaurant could be that they wanted to create another section or another department with regards to the main business, or they wanted to dissolve a certain part of the company. So all these things are they should have a formal plan to it. And B, it should which area is going to be affected. That's what you call the principal area or location affected. So all these things must come to play. So which area, which department is going to be affected by by this restructuring? It could be an area, it could be a location, it could even be a functional department, right? Okay. And also maybe the number of employees who are going to be affected. Because when I'm doing restructuring and then employees are going to be affected, then you need to pay compensation for removing them, right? And then you state when the plan is going to implemented. Okay, these are the detail of the plan that the company has take into consideration in restructuring. So these are the detail of the plan. Then we come to two. After we know the detail of the plan, the entity has when the entity has raised a valid expectation in those areas or in those affected that the restructuring will affect. Either by starting implementing Okay, it's about starting to what? To implement or announce or announcing its main features. Okay, so what this means is this. When the company wants to embark on restructure, first, they will have to what? Detail the plan of the restructuring. Two, after they have done all the detailed plan of the restructuring, then the company must ensure that the affected people will be informed. Listen very carefully here. When they start, after they are done with what detailed plan of the restructuring, the affected parties should be informed of the decision of the company. If the company wanted to do restructuring and the people who will be affected, especially the employees, if you don't inform them, you cannot create provision. You didn't inform them promptly, you just come. No. You don't create provisions. Those people must be informed first, right? To form part of the plan before then provision can be recognized. So the entity has raised when the entity has raised a valid expectation in those affected, that restructuring will be carried out either by starting to implement the plan or announcing its main feature. So simply put, make sure that the affected parties are informed. So these are what should come to play when it comes to restructuring. And note, retraining of employees, reallocation costs or relocation cost of what? Of staff, marketing, and investing in new system are excluded in restructuring provision. Don't add them in restructuring provisions. All right, so you take note of that. But however, one, redundancy cost, the employees who will be affected by that. Two, termination penalty. You terminated you terminated contract and you are paying penalty. Three, you have a lease item, you have to lease cancellation cost. All right. Okay. So these three, they are they are included in the provision. If you find it, you will include it in the provision of of the the cost. All right. So this is that is all about about restructuring provision. Now let us look at question number 8. On 30th June 2012, the directors of Delta decided to close down a division. This decision was announced to the employees affected on 15th July 2012, and the actual closure occurred on 31st August 2012, prior to the 2012 financials being authorized for issue on 15th September. Expenses and other items connected with the closures were as follows. Redundancy costs 22. Staff training, staff retraining, actual 14. Operating loss for the 2 months 21. Estimated at 30th June, which is 20. Net sale property 5. The actual redundancy costs were 20 million, and the actual operating loss for the 2 months to 30th August was 15 million. What is the amount of the restructuring provisions to be recognized in the financial statement of Delta PLC for the year ended 30th June? So how are you going to treat this? You are confronted with this. First one, you have redundancy cost, 22 million. That is estimation, but they've told you that the actual redundancy cost was 20 million. Staff training, operating loss, which items are going to are going to be picked for what for the provisions. So here, redundancy costs, they've given you estimation and they've given you the actual. Which one will you pick?
We use the actual.
Okay. So the actual what is what you are going to, so that is what the actual redundancy cost 20 million. Staff training, is it part of what provision?
No, we are told staff training relocation.
All right.
We need
Operating loss, is operating loss for the 2 months going to what? Going to be a provisional?
Yes, operating loss, we look into it. That one we've not mentioned it, so we consider it.
What about net sale of property provision?
Net sale of property.
Yeah. Can you see it about? I taught you what we call future operating losses. You realize that there is what we call operating loss for the 2 months. What did I say about what? Expected operating losses of what? Of a company. What did I say? I say it's also referred to prohibited provisions.
It's a provision.
Provisions shall not be recognized for future operating
Future
losses.
operating
That's
losses.
what that I said. Future operating losses. So they're giving you operating loss for 2 months. Net sale of what property is also not, it's not provisional. Once they've sold the asset, it goes in as what? Income to the company. If they are expecting revenue from this net sale, they will disclose it as contingent assets with regards to the net sale of what of property. We'll get to that point. But the most important thing that you should understand. So here, let us analyze the question. The question is what? Delta Limited. They want to do restructuring. First item is redundancy cost. So redundancy cost, they're giving you what? Actual, and they're giving you what? Estimated. So you pick the actual. In the question is what? The actual is what? 20 million. Then that will come here. 20 million. Now, let's go into the question. They've also given you staff training costs. So staff training costs, I've already told you that staff training cost does not qualify to be provisional. Because staff training cost, when you check here, excluded retraining. You understand? As part of its excluded provision. We don't add it. Then the next one is what? The next one is what? Operating losses. And I've already concluded with you on operating losses that we have prohibited what? Provisions. One of them is future operating losses of a company. So if company expect to incur losses in the future, we don't create provision for them. And I've already explained vividly that if not, companies will hide behind it and create provisions, and then it reduce their administrative expenses to evade tax. So that one too is not, we don't create provision for that. We also have net sale of property. This one, once they've sold the property, it goes into the company as what? As revenue. So the net sale, two things will happen, which is 5. If income is received, it goes to what? P&L straight away as what? As income. If it is not received, it goes in as what? Contingent what? Asset. And it is disclosed in the what? In the financials. So we've analyzed the question. So the only item that qualifies under this restructuring is what? Redundancy cost. That's all. Is the redundancy cost. That you create provision for redundancy costs. That is all. So this only qualifies for what? For provision. That you create provision for it, then you create journal entry for it. Okay. All right. So that is it about that.